I have two questions for you guys. Is the Fed trying to crash the market? And was this nothing more than a major trap? And in this video, we're also going to announce the winner of the 50K Take Profit Trader Test Account. Now, if we come over and look at how the Nifty fared across the board, the Dow was up 585 points. Nasdaq was up 400 points. S&P 500 up 91 points, with the Russell 2000 being up 4.77. We come over and look at advancing issues versus declining. We had 79.9% of issues advancing on the day. Then we come over and look at the sectors across the board. Every single sector was in the green. No sector was left behind. The weaker of the sectors out there was energy. Then we come over and look at the fear and greed index. Right back at it again. We are back over into greed. Now we look at the economic calendar for this week. Very, very light. Not a whole lot of news. Tuesday, we have ISM numbers coming out. Then on Thursday, we have the weekly unemployment claim numbers coming out. And that's really all the news we have to contend with. Or is it? Because if we come over and we look at the earnings calendar out there, we still have a lot of companies coming out with earnings. For instance, after the bell today, we had Palantir come out. And we look at the expected move of Palantir, plus or minus 12%. So if we come over and look at Palantir, we can see the initial reaction is to the moon. Now Palantir is trying to retrace back just a little bit. And let's not forget, we look at this on the daily chart, that puts Palantir making another new all-time high. Well, if we come over and look at this first article right here, here's the case against a September rate cut and why the Fed could stay on hold until 2026. And if we come over real quick, I want to show you guys how this article is actually going to conflict with what the market's pricing in, because if we come over and look at the Fed watch tool, we can see the market right now is priced in an 89.9% chance that the Fed will be cutting rates during the September meeting. But when we come over and look at this article real quick, a team of economists of B of A Global Research outlines why investors might be putting too much stock in a September interest rate cut. Now, to sum up what they go on to say is, they basically say, even with the numbers that we got out from the July numbers, they still say the labor market is robust and very strong. However, if we take a trip down memory lane real quick and we look at the non-farm numbers that came out last week, keep in mind, we came in at 73,000 new jobs. They forecasted 106, and look at the revision. We had a revision down to 14,000 when the prior reading was actually 147,000 jobs. That was a big discrepancy, which actually caused Trump to go ahead and fire the higher up at the BLS. Then we come over and look at this article right here. Top officials, unswayed by poor July jobs report, take wait and see approach to rate cuts. Now, if we've already seen the labor market starting to deteriorate, do you guys think this is a smart plan? Should the Fed be sitting on their hands, or do you guys think the Fed should be cutting rates? Let me know your thoughts in the comment section down below, because we can clearly see they say the labor market is solid, but when we get a revision like this, is the labor market as solid as what the Fed likes us to believe? I want to make you guys aware of some amazing prop firm deals out there. Apex Trader Funding, 80% off all their evaluation accounts, passing as little as 1 day. Tradeify, 35% off all account sizes. Use promo code Mike for those two prop firms. Last but not least, Take Profit Trader, the prop firm with the best payout policy out there. You can get 40% off all their evaluation accounts, no activation fee, and get your test fee refunded on your first payout. To take advantage of that offer, use promo code Epitome at checkout. Now, as we come over and look at the volatility index, we can see today the VIX was down 13.94%. Now, I warned you guys in Sunday's video. Friday, the VIX was up more than 10%, actually closed up like 20%, which indicated that either today or Tuesday was likely going to be an update in the market. We got the update today. Now we get the reverse. Today, the VIX closed down more than 10%, which indicates that either Tuesday or Wednesday is likely going to be another down day in the market. Well, if we're going to have a down day in the market, is it going to be before we're able to fill the gap? Are we doing nothing more than getting into the gap? And this is looking at the SPY real quick. Get into the gap, and then we're going to set a lower high and then form some type of ABC pattern that could take us towards this weekly breakout point. Now, if we come over and we look at the weekly chart real quick, that zone that we have drawn out was the prior all-time high that we broke out from, and we have still failed to come back and retest, at least at this moment. And let's go ahead and role play this out real quick. If we grab our Fibonacci retracement tool, measure from all-time high to the low out here on Friday, we can see we're already above the 50% retracement. We're approaching the 61.8. Somewhere in this area, if the market's going to put in a lower high, this would be the area where we look for that to actually take shape. If we actually look right up here, if we break the 786, expect the market to go ahead and run and make another new all-time high. Now, as we come down, we start looking at some of the charts real quick. We look at the 4-hour chart. MACD indicator basically basing out near the zero line, kind of flat lined out there. And you can see we're coming up, and on the 4-hour chart, we've almost made it up, closing the little gap that we had out here. But now we have a problem. Now we left the gap behind from the down to the downside. Then we come over, look at the 30-minute chart, and notice a big gap up. We failed to completely close the gap. Now, after hours, we did get very close to it. But I'm going to look at today's profile shape as a P as in Paul. Now, this isn't necessarily bullish or bearish, but what it does give us clues on is once we start breaking below the distribution area, then it increases the probabilities that we will explore the lower third of the range. And we start breaking that, we'll probably come down towards gap support and potentially coming all the way down, filling the gap. MACD indicator I warned about in Sunday's video was already trying to firm up, trying to get a cross up, and today we got the good separation of the lines, and it stayed roughly at a 45-degree angle for the entire trading session. Now, we come over, look at the futures markets real quick. We start off looking at the 4-hour chart, and here's one of the zones we had drawn out this morning. And to me, it was a little bit of a party pooper. I thought we'd make it up here. I was hoping when the opening bell rang, we'd dip a little bit so I could buy up towards that area, and the market just ran. Look on the 4-hour chart. We've had 1, 2, 3, 4, 5, 6, 7 consecutive up candles in a row. And with that being said, the more consecutive candles we have up or down, the higher the probability that we are going to get an adverse reaction sometime in the near future. Now, in Sunday's video, I also told you guys about value area low and the fact that the market was able to close well below that price point. Well, that came in at 63.65. Well, today, what's the high been so far? We had a high of 63.65 and a half. So that target has now been completed. And I warned you guys, either this week or next week, highly probable we were going to hit that target. Now the question is, do we start coming back down? And if we're going to work our way back up, do we set up an ABC pattern up? Meaning we come up like this, we pull back, and then we set up an A to B equals C to D pattern. Now let's just role play this out real quick. If we start to pull back roughly down towards this next high volume area, that could give us a price completion all the way up here about 64.29. But we got to wait for that pullback to get underway. Now, to get an idea of how low we may pull back once we start to pull back, once we start to see a reversal, we want to pull our Fibonacci retracement, swing low all the way up to the swing high. Now, the 38% retracement would be the first logical area we expect the market to pull back towards. Now, if we do go higher out here in Asia, we'll simply have to grab the Fibonacci retracement tool and move it up until we finally start to get that turn in the markets. Now, as we come over and look at the daily profiles over here on the 30-minute chart, we have that P as in Paul shaped profile. Now, we do have a problem because we do have an untested point of control up here, 64.23 and a half. We can see last night from the open, we gapped down and we just ran up all night long. Asia, London, New York session, and now we're closing right up here near the highs of the session. Value area high comes in at 63.57.75. The point of control will come in at 63.45.75 with value area low coming in at 63.29.75. So if we start getting back below value area high, I want to target the point of control. I want to target value area low, and then I'm going to want to target the lower third of the range. And maybe in this case, I might want to bump it up just a little bit. Kind of this distribution area right here has my attention, which comes in somewhere about 6,300. Now, if I grab a Fibonacci retracement, measure from high down to the low, actually, we can see that I really want to look for targets, typically with this pattern, below the 38% retracement. So this target today would be a little bit higher, but looking at the structure, this is going to be one of those cases where I would want to bend the rules a little bit and use that 6,300 as a potential target if indeed we do start getting down here below value area low. Now, today we were able to take out that P point, and if we stay above value area high, then one of the targets I'm going to be watching to the upside is going to be 64.23 and a half. Now, I would prefer to get some type of pullback before we're going to go ahead and run all the way up to that target if indeed we're going to make it up there. Now, when we come over and look at the QQQs real quick, you can see the Qs right there, almost filling the gap after hours. Almost, though, is not good enough. We did not quite make it all the way up there. Now, as we look at this, we see the MACD indicator is clearly crossed to the downside. But now as we come over, we start looking at the 4-hour chart. What do we have? Well, we had the push down. Now, do we start to get a rejection back down from this area? If we start seeing the market turn somewhere in this area, that's when I'm going to really want to look to play the ABC pattern on the way down. So if we measure swing high to the swing low, anywhere from the 50% all the way up to the 78.6 fib level, which comes in about 569.75, would be a logical area where I look for a retracement back down in this market. Then we can role play this out real quick. If we were to grab this and go A to B, B to C, and let's say we go all the way up, and we're just going to stop it right here, right between the 61 and 786 fib level, that would give us a price completion of about 544.66. But again, we have to wait for that turn to take place. And when we're looking to trade the A to B equals C to D pattern, remember that pattern is not validated until we break below the swing low. Now, as we come over, look at the 30-minute chart real quick. Notice we had that gap up today and we basically consolidated up here at these upper levels. The market did not want to give it back. And since we're light on news, what's going to be the catalyst to really get the markets pulling back just a bit? Are we going to see a big miss from one of the companies out here? Or do we just simply keep chugging all the way to all-time highs? Now, if we can break below 562.55, I want to look for the market to come down towards the lower third of the range. Then I want to see, can we come down and test gap support and potentially come all the way down, filling the lower gap that we left behind from today. Now, before we come over and take a look at the futures markets real quick, I want to announce the winner of Sunday's Take Profit Trader account giveaway. And the winner is going to be FX3179. So I'll reach out to you via email. Now, if you guys want a chance to win a Take Profit Trader account, make sure you guys are signed up to the email list down below. We're going to be giving away another Take Profit Trader account. We gave away one today on the live stream. We're going to give away a Take Profit Trader account every single day, all the way until Saturday. Now, we come over and look at the Nasdaq futures real quick on the 4-hour chart. What do we got going on over here? Well, I want to go ahead and grab the Fibonacci retracement, all-time high, all the way to the low out here. Then we can see we've already hit the 50% level retracement. Are we now going to make it towards the 61.8 and potentially hit that point of control at 23,486? We've already taken out value area low from the prior week, which we talked about in Sunday's video. And we've had 1, 2, 3, 4, 5, 6, 7 consecutive up candles in a row. So I think we're going to get some type of pullback in the near future would be warranted at this point in time. Now, as we come over and look at the daily profiles out here on the 30-minute chart, we have that P as in Paul shaped profile. And there's a couple ways we can play this. One, if we go below value area low, we can look for the market to come down to the lower third of the range. Just eyeballing this, I kind of like right here, right near this low volume node right here, or this high volume node right below that area, somewhere in the ballpark of 22,993. However, that's not going to be my favorite way to play this pattern out. Instead, I prefer to see the market break above value area high, which comes in 23,338.75. Then start to come back down below that level, because then we can use that point of control as target number one, 23,268 and a quarter. We breach below that. Then we have two different scenarios from that point on. Do we want to target the high volume node at 23,219? Or do we want to use the next target at 23,170.75? Now, it doesn't have to be one or the other. We can use both. It really depends on how we're trying to trade this. Are you trying to trade one trade all the way down? You have multiple contracts, or are you looking for scalps and using these targets as kind of runner plays from scalp trades? Anything below value area low, I'd want to refer back down towards this area down here. Now, we can look for a quick, another little target somewhere near this distribution area of the profile. We'll call it 23,084 down to about 23,058. Now, if you guys would like to learn about the micro scalping rule with Take Profit Trader, then you want to make sure to watch this next video right here.